Hey, everybody, welcome to Charts and Coffee. Great to see everyone. Happy Monday. Hope everyone had a great weekend. We had the Miami Grand Prix down here, which was pretty cool. Watched it on television. There must have been about 4 jillion people down there. Very cool stuff. Hopefully everyone had a good, relaxing weekend because we have a slew of Fed speakers. It's exhausting to even think about. We're cranking up the coffee this week, and we are likely going to be shortening some time frames to deal with the volatility. So it's going to be a nutty one. And then I consider where we are juxtaposing that non-farm payroll from Friday. We talked about this on the Sunday show. So the weekly notes that go out, we take a look at this week in the market on Sunday. We have the notes where I'm getting very specific about what events and what corners of the market still have the kind of structure that we need to prioritize. One thing that really helped me early on in my trading career when I was building watch lists was to be specific. I thought early on, as a new trader 30 plus years ago, I thought I have to look at every corner of the market. And that was actually not only untrue, it was counterproductive. And so please don't feel that week in and week out, you have to have a set sort of regimented list of looking at everything. It makes sense to know what the different sectors are doing, but it's actually more important. It's just going to sound counterintuitive, as are most things that work in the market at scale and over time. It's going to be far better to have a list where you're not analyzing everything, to take a look at a sector like, for example, XLV, and say, you know what? I don't know that I need to dive into this particular symbol, the XLV, but maybe I need to dive into the individual stocks within the XLV, and you learn to get far more selective. I think sort of our neophyte habits are, well, I need to know what's going on everywhere. Take a glance, and if the structure is not suitable for a potential trade, you might go down another layer, another notch to, well, what are the stocks within that sector? And is there anything interesting within that? But it's really more important what you don't analyze in some ways compared to what you do. And that's what my Sunday notes hopefully really get across, which is I'm looking at a very specific set of symbols. I'm looking at a very specific scenario. And then we're making sure we're aware of all the hot zones. And again, we have lots and lots of Fed speakers coming up. So with that in mind, knowing that lots of these days are going to be, in many ways, caution days, we'll move forward with that awareness, with that prudence, with that knowledge. But of course, our show is always about your questions. And so let's go ahead and dive in. All right. Starting off with Adit. Good morning. What sectors are we bullish on for this week? Crude is still squeezing on the daily. All right, let's tackle that two-part question. So as far as sectors go, and the layout you're looking at right here, gang, is the layout that I'm, especially in summer, is layout that I'm focused on, which is just always giving a nod to the weekly, knowing where we are there. Definitely the 5-minute, which is on the far, well, my left, I imagine your left too, the left side of the chart, and in the middle is the daily. And that's where I wanted to assess the broader psychology of the market. When I take a look at XLV, we take a look at this corner of the market. Is this in a downtrend? No. And what I do, Adit, is I just go through every single symbol till I find those trends. The downtrends are really the ones that are popping out. The one that I showcased in the notes was XLF. I'd also keep an eye on XLC. I'd keep an eye on XLK. It's kind of vacillating between bearish, neutral, SMH, which we highlighted in the previous release of the notes, the previous, whatever you want to call it. So XSMH. So the best trends, for the most part, Well, the downtrends far outnumber the uptrends, but we do have some uptrends, and they're not great. They're sort of vacillating between neutral, bullish, neutral, bullish. And those are things like FCG and XOP. And the reason they are moving higher is because of natural gas. All right. So pullbacks in natural gas should give us some good opportunities, not only in natural gas via NG futures or maybe UNG ETF, but also should give us opportunity in some of the stocks weighted within FCG, XOP. There's not a lot left in the commodity corner of our marketplace. There's not a lot left in terms of structure that's bullish based on the inflation and the commodity trend that was really, really outperforming for the past 6 to 8 weeks. That trend came to an abrupt, even violent, merciless halt between the 21st and 25th of April. And the hardest thing oftentimes, kind of going back to my earlier comment, is eliminating certain corners of the broader markets from contention, eliminating certain macroeconomic trends from contention, at least for a little while, until the structure reorganizes, right? NASDAQ is in a fantastic downtrend, right? S&P is not quite yet, but we've been talking about this in Charts and Coffee. We've been talking about this in the Sunday Notes live show, that it's inevitable. It's going to happen. It's absolutely inevitable. As far as crude oil goes, I will tell you again, what we look at is going to dictate the trades we take. And I'm really not looking at crude oil. RBOB is a double green uptrend. Crude oil is not. Is RBOB is gasoline, by the way. Is gasoline capable of moving without crude? Clearly it is. I don't look at this as a compressed market. So when you mentioned squeezing on the daily, this doesn't have, again, it's not about the indicator. It's about the structure of the price action that the indicator is overlapping with. So I don't look at this as an environment for a breakdown. I would focus on RBOB. I would focus on natural gas. All right. So again, what we're looking at is what we need to be really cautious on. So as far as the Wednesday inflation reports, is it still too soon for good news? I don't even know how to answer that, my friend. I appreciate the question. We have CPI and PPI coming up. Let's just take it as it comes. Let's not get in the habit that so many traders, look, gang, I'll tell you this. I don't know what's going to happen tomorrow, Wednesday, next week, or the week after. Never have. Not in 33 years. As I like to say, my crystal ball has been in the shop. But remember what our job is. There is a whole slew of people whose job it is usually to sit on television and talk about how they know where the markets are going to go. Yeah, I don't listen to them. That's a different job. It's not trading, right? It's not trading. Their job is information, entertainment. I don't know, but it's not trading. Traders just acknowledge this really simple truth. And it is a truth. We don't know where the markets are going to go, but we do know what we want to do if it gets to our price, right? So terrific question. Just a little bit of reprogramming. You're on a good track because you've got those hot zones in mind. So good stuff, Adit. All right. We're all excited to see the new watch list after the chaos. Student, yeah, I think that it's in a constant state of flux. But one thing I know we're going to see less of are multiple commodities that we had been so profitable on for weeks. And a lot of those narratives are just broken. And the unceremonious breaking of trends do come with paper cuts. So I don't want anyone here to in any way think that I was able to navigate around that one last trend trade. Nobody does, right? Nobody does. However, one thing we have been doing is shifting our focus not solely to inflation and commodity setups, but we're looking at how home builders and construction and financials. And there are some gorgeous downtrends that are really going to take a prominent place in our watch list, not because I'm bearish, but because we emphasize trends. And we still have a number of uptrends, but it's far less than it used to be. We have a growing number of downtrends, and we always emphasize those trends. So yeah, I'm looking forward to it too. All right, WEC. Hey there, Jimmy. So ready for a long call. It's a neutral market, Jimmy, and it has been since the last bit of April. It's a neutral market. So I would be very, very cautious on that. Sorry, gang, I had a pen explosion here on my desk and there's just ink everywhere. I don't know how this thing exploded, but sorry. Yeah, if I seem a little distracted, there's just blotches of ink all over me, all over the desk. All right. So, I think I found the culprit. Huh. All right. But anyway, so what we want to remember is that if we are going to focus on things like WEC, my main issue isn't that it's a bad place to look at a long position, because take a look at the trend that preceded the sideways movement that we're in now. So the directional bias is still up, right? It is still up. I would focus on conservative, and frankly, this is a compressed market. So that earlier comment about something compressed or squeezing, this is a compressed market. This is the kind of environment, yellow, neutral trend with price action trying to plot 4 blue grab candles in a row stuck inside the wave. This is the kind of breakdown trading environment that I like to focus on, with as many blue grab candles as possible and respecting the trend that preceded this compression. So I hope that makes sense. Gang, there is no indicator in terms of the subchart, right? In terms of stochastics or RSIs or MACDs or whatever. There's nothing that works in all market environments, right? We really need a set of tools for trends, specifically up and down trends. Same tool should work perfectly well. They should be robust. We need a tool for compressed markets, breakout, breakdown scenarios, which I believe WEC is in, Jimmy. And we need a set of tools for choppy markets. If ever you wonder, how come there's so many indicators? Because traders like myself, traders like yourself, we're all trying to decode the market environment. We're not trying to find, at least if you've now grown up past the point of looking for the holy grail of indicators, you now know that just like you don't play golf with one club in your bag, you don't go fishing with one reel. Most people who fish will go with multiple rods and reels, multiple bait, multiple types of bait, because you never know what kind of environment you're going to run into. So you prepare for all of it. And, that's where having a ready-made kit, right? So whatever it is your indicators are, having a kit for choppy markets, having a kit for compressed markets, having a kit for that trend, then to pull that set of indicators. That means that you have to have a consistent way to define that environment. And that's so much of what we do here in Charts and Coffee. That's definitely what I emphasize in the Sector Secrets Mastery. This is a compressed market. Those are my thoughts. We want to treat it with a bullish bias, but likely it's going to be a breakout, breakdown setup. All right. So awesome question. All right. I refer to the Sunday notes. Where can one access them? So the Sunday show we have here free at the Simpler Trading YouTube channel, and the notes I send out to the members within Simpler. So if you're a member of the Futures Room, the Options Room, or my Sector Secrets Mastery, there's a link I send to you. It appears in the room, and it also pushes out to your Simpler Trading mobile device. It's very, very mobile friendly. The notes that I send you, I don't do it in PDF form or some such scrunched up version. I use a very nice reactive service that resizes really nicely. Anyway, members have access to that, Larry, and then everyone has access to the show. So hope that helps. Guillermo, I think we're slowly getting pretty flat right now. And it's amazing if you're looking for fresh eyes, if you're looking to sort of reconsider what you want to do next in the market, it's amazing how it's almost psychologically impossible to do it with a full book of trades, especially those that are still in no man's land, having not reached their stop level or their first target. That's no man's land. It's not working. It's not hurting. It's just not doing anything to hit those actionable exits, either the stop loss exit or the target exit. And then I have a number of trades that are just in trailing mode. Some are still pretty good. But I agree. I'm looking at my book of trades right there to my right. So yeah, I'm probably about as not flat, but I probably have about as few positions as I've had in a really, really long time. I'm with you. I'm with you. And that's for me fantastic because it's the only way that I know to have a true, clear, unbiased read. It's almost impossible to have an unbiased read without getting to some degree flat, right? Flat meaning, by the way, gang, flat trading jargon is basically no position. No position. You've closed the position, you're flat, or you don't have any position. All right. Can I go over the steps to take when a trade goes in the opposite direction? Janelle, so what I teach everyone in the mastery, and by the way, the bonus session, probably the most important bonus session that we're going to have, which is what we call the Holy Grail session, risk management, position sizing, how to trade a large account, Godzilla sized account, medium sized account, small account, right? There is a formulaic approach to that. We're going to dive into that today at 2 p.m. And by the way, you can still join us for that. It's about 5 hours away. Head on over to simplertrading.com/join/sector. That starts at 2 p.m. today. So what do I do when a trade goes against me? Well, Janelle, it's never going to be a surprise in terms of what I'm risking, right? We don't know what a market's going to do, but I do know where I want to get out. So there'll be alerts placed there. We'll obviously define what that loss will mean to our account. And what steps do I take? Everything and anything it takes to do two main things. One, maintain the discipline of following my trading plan. And two, being aware that price is nearing a level that I need to get out. So the steps are basically that. Always being aware of the risk, which you must know the moment you get into the trade. Risk is defined, predefined even, because without knowing the risk, how do you know if the trade's affordable? And the second part is having already accepted that that's the risk. When it closes in on that level, we just make sure our alerts are there, and then we'll just look to exit. I mean, that's the steps. The hardest step, Janelle, is the hardest step, and it's a great question you ask, is following the plan. And the reason that's the hardest step is twofold. Who wants to take a loss? Because there's always that hope, because a pig in the head says, well, maybe it'll come back, because the brain remembers maybe that one time you held on, the market came back, and you thought, oh, look, stop losses and risk management don't apply to me. The market's always come back. And that's where you see traders add to losers ad nauseum. And while sometimes it works out great, eventually it will blow your account up. Those are the type of habits that map to a blown up account, which, by the way, is not and never will be a rite of passage. It's simply a misunderstanding of, and even a miscommunication from whomever maybe you learned to trade from, of how to position size. It's a miscommunication of the arithmetic around risk. So whatever it takes for you to trust your numbers and follow your plan. And I know that sounds very woo-woo, but that's really the problem most traders have. Yeah, that's really most traders struggle to follow their plan for two reasons. One, it was given to them without transparency of what's the mindset behind it or the plan behind it, or two, they just were not calibrated to the risk. So they reached that too big to fail, right? I can't get out now, I'm losing too much level, which everybody has. We'll be talking about that today at 2 o'clock. Everybody has it. We have to do everything we can do to avoid that level. So there's too big to fail. In Wall Street, we have too big to fail as well. AN, is it a long or short? AN is neutral market. I don't know that it's a short yet, but the closer we get to previous highs, yeah, I would say, if anything, it's overbought, Michael. But here's the thing. I would have to look at other stocks within the group that AN trades within. I'd want to look to see if there are better examples of choppy market, or maybe there's some uptrends where we would buy the dip. So AN, I would say it's overbought, which would map to your question, Michael. Is it a short? It is a potential short. And also my pattern right there, that arrow indicates that we have a potential near-term reversal setup as the market heads down. Well, it did it as this particular market, AN, heads down through that May 4 low. All right. So I hope that makes sense. Jackson, are you doing any swing trades at this point or just day trades? We have both, Jackson. We have both. Far fewer than we had. So the pace of trades we had 6 weeks ago, 8 weeks ago, through February, March, and most of April, it was a pretty hectic pace. Hectic meaning we were having so many opportunities. It was almost having to cherry pick amongst affordability and the best setup. It was an embarrassment of riches. Now, not so much. We've adapted. 2 adaptations. 1, acknowledging that trends that were so good to us are broken. It's the hardest thing to do, really, as a trend trader, to let go a symbol that you know was a needle mover in your P&L, and now you say no can do, right? I can't go for that. As I like to say, the philosopher Hall & Oates taught us. It's a very difficult thing. The other part is, yes, being able to shift gears. I always remember pole position as a kid. Big time video game, high gear, low gear. Switch gears. We're at a different part of the track, right? This is not wide open throttle time. This is shorter time horizons, shorter time intervals. Having the freedom to say, I don't give a rip what's going to happen tomorrow. Just give me 30 to 90 minutes of clarity in one direction. Just everybody agree for a short period of time just to move that away, right? And we can take advantage of that. That's what day trading is all about. Day trading is being flat at the end of the day. That is it. The way that we day trade differs from trader to trader, but the definition of day trading is simply this: I'm going to be flat by the end of the day. You can day trade off a daily time frame, but you're going to be flat at the end of the day. You can day trade off a 5-minute, 1-minute, 2-minute, 15-minute time frame, but you're going to be flat at the end of the day. The key is, not even trick. It's not a trick. The key is, do you have a setup that will appear, trigger, follow through, and allow you to get out before the end of the day? So there's a lot of things that have to happen in a fairly truncated amount of time, right? So that's what the strategies of day trading. That's why it seems almost infinite strategies to day trading. But I will tell you this: you need 4 factors to be a day trader. You need to understand time, volatility, volume, and price, right? And that's where a lot of day traders, the wheels fall off the wagon, because they're only maybe operating from 2 or 1 of those factors, not all 4. So yes, definitely looking to shorten the time frame. We have to, right? We have to. Markets tend to sort of float on a breeze through summer, and this one's choppy at that. And then with the volatility session to session, day trading freezes up again, just to look for a small pocket of clarity and then get out. Hopefully, sorry gang, I ran over. Hopefully this is helpful as always. Thank you so much for your time. Thank you for the awesome questions. And I will see you all tomorrow, same time, same station, 9 to 9:20. Bring your questions. Get them in early. I go right down the line. All right, gang? So be good to each other. If this content, these shows are moving the needle for you, the Sunday show, check it out. It's at the Simpler Trading YouTube channel, or our weekly, or I should say our daily show here Monday through Friday. If it's moving the needle for you, smash that like button. If it's not quite there for you yet, I get it. Leave me a comment, leave me a question, and we'll do what we can to make sure we're getting the best we can get out to you in these 20 minutes. All right. Be good to each other. I'll talk with you soon.